You have probably seen the headlines about investors dumping US assets and the dollar looking weaker. Today, we are going to unpack what that really means in simple language, what might be driving it, and how to position your money wisely. If you want a small, beginner-friendly way to start an online income while you learn, there is a $7 starter linked in the description and pinned in the comments. Use it only if you want a simple first step. First, what is de-dollarization? For decades, the US dollar has been the main currency for trade, savings, and global finance. When countries buy oil, move money across borders, or park reserves, they often use dollars. De-dollarization is the idea that some of that activity is slowly shifting to other currencies or assets. Recently, there have been reports of large foreign net selling of US assets in a short window, which made people nervous. The details change week by week, but the signal is clear. Some big players are reducing exposure and diversifying. That is not the end of the dollar. It is a reminder to think in scenarios, not slogans. Why might investors sell? Reason 1. Interest rate cycles. When the Federal Reserve raises or pauses rates, yields on US bonds change, and global money shifts to where it gets the best risk-adjusted return. Reason 2. Currency risk. If a fund expects the dollar to soften, it may lock in gains and rotate into other assets. Reason 3. Politics and trade. Sanctions, tariffs, and supply chain rewiring all affect how comfortable foreign institutions feel holding dollar assets. Reason 4. Diversification. Central banks and large funds sometimes increase holdings of gold or non-US assets as a hedge. What does a weaker dollar mean for regular people? Imports can become more expensive. That includes electronics, certain foods, and travel abroad. On the flip side, US exporters can find it easier to sell overseas, and some international investments may rise in local currency terms. Stocks that earn a lot of revenue outside the US can benefit. The point is that currency moves create winners and losers. You do not need to predict every wiggle to win. You need a plan that works across scenarios. Let's zoom in on the practical moves. Number 1. Separate your short-term money from your long-term money. Your next 3 to 6 months of expenses should sit in safe, boring places, so headline shocks do not hit your grocery budget. Your long-term money should be diversified across assets that can handle different environments. Broad stock funds, some bonds if it fits your profile, and a small allocation to hedges like commodities can make you more resilient. Number 2, if you invest in individual stocks, check where they earn money. Companies with global sales can benefit when the dollar dips. Companies that import a lot of inputs may face higher costs. You do not need to panic. You do want to understand what you own. Number 3, think in cash flows, not just prices. Dividends, interest, rental income, and online income streams reduce stress when markets swing. If all your money comes from one paycheck, every headline feels scary. Add one small engine that earns while you sleep. Number 4, keep an eye on debt. If rates stay high, variable rate balances eat your cash. Chip them down first. Fixed rate mortgages you locked in earlier are fine. New debt? Think twice. Number 5, build optionality. A second bank account, a second income source, and a small buffer of cash at home give you control when systems slow down. You will not need any of it most weeks. You will be grateful for it when news turns messy. A quick reality check. The world still runs on dollars today. The network effects are massive, but long cycles change slowly, then suddenly. The smart move is not to predict the exact date of a new world reserve. The smart move is to build a personal system that wins either way. Spend less than you earn, own productive assets, protect your downside, and create new income. Here is your simple action plan for this week. Review your accounts and separate short-term cash from long-term investments. Add one small hedge if you have none. If you want a ready-to-use shortcut while you learn, the $7 starter in the description gives you a basic funnel and follow-ups, so you can focus on creating value. Activate it only if you plan to take action. If this helped, hit the like button so the algorithm shows it to more people. Subscribe for practical money moves. Comment with the one step you are taking this week. Big headlines come and go. And remember, your plan is what pays you. Thanks for watching. See you in the next one.